What's good? What's good? Welcome back to Invest and Trade with Jax. Good morning from Canada. Hope everybody is doing well. We're going to go over our friend Matic. Our trade absolutely exploded. So we're going to get into it, guys. We're sitting at 233. We're up 27% on the day. We're sitting at a market cap of 16.23 billion. And the 24-hour volume is 5.07 billion. So let's hop straight into it, guys. So our first dollar cost average buy zone was here at 175. We hit it and we exploded. So that was a juicy trade all the way up to our take profit zone. 34% all the way up to the peak here, 38%. I still have a little bit left in the trade. I took profits here. I took some profits here. I took some profits here, and as it was going up, I also added into it because I took profits, right? It kept going, so I added a little bit, and what's going to happen is your average price is going to rise. But what I do is I set my stop loss at my average price. So if it drops, I break even. But if it continues, then I can continue to make more profit because I put more money into the trade. That's always an option with your trading strategy. All right, guys. So we came all the way up to our take profit zone at 233. You can see here on the 1 hour, went right up into overbought. And we started to come down a little bit. And normally that's when you're going to see your move downs. But it doesn't mean you're going to move all the way back down. As you can see here, a nice little pump, came back to a level of support, bounce. So what I've done, instead of putting buy zones, I'm just going to put bounce zone. I'll put one right here as well. Previous take profit. We're going to call them bounce zones from here on out. Because what can happen is price will come down and it will bounce off these levels. If I scroll back here, you can see previous swing high, right? But it's not ideal for dollar cost averaging. You usually want to wait until you trend down to oversold. I actually updated this on my next chart, but I'll do it here as well. So I had put a bounce zone just as we had pushed past that level of resistance. Now I'm going to put DCA buy zone. Ooh, it already says, there we go. Because now that we've had a juicy pump, if we come back down to 193, we start to come back down like this, come back down to 193, what's going to happen is the RSI is going to come back down to oversold. And that gives you a good opportunity to bounce and a good opportunity to start dollar cost averaging into your trade, in my opinion. It's not financial advice, guys, just for reference. I'm not your financial advisor. I'm just a young guy from Canada. Quick drink of tea, guys. Hope you're well. Hope the pets are healthy and you have someone in your life that absolutely cherishes you. I think that's important. And if you don't, just enjoy being single. All right, guys. So we have a bull flag pattern. Now, this is another thing that you can do here. Let's say you locked in your trade at 233. You made some juicy profits and you're pretty happy. But you're like, what if Matic keeps going here? Well, what you can do is trade a breakout. It's a more risky trade, especially when you start to trend into these overbought areas. I'm also going to show you another reason that it's more risky. However, if you do start to break out, what you can do is trade the breakout, take you up just past our next take profit zone at 260, which is pretty close to the previous all-time high. So if you start to break out, you might create a lower high, which is a bearish divergence. But let's say this trade looked good and it was starting to break out. It breaks this high. There's no bearish divergence. Well, you can trade the breakout with a stop loss, right? And then if it rolls over, it hits your stop loss, you're okay. And if it continues, then you can lock in those juicy gains. Now, I haven't closed my entire trade. I closed quite a bit of it, probably about 70-75%. As right here, I took some profits. I took more here. I was also adding on the way up, and I took a big chunk here at 233, but I still have a little bit in the trade just in case it keeps going. I am going to go back to trading on Bybit just due to the fact that you can adjust the leverage in between 2 and 3. I could go 2.5, I could go 2.8, I could go 2.3 because I don't really use over 3x leverage with this strategy. And on Binance, you can only do 2 or 3. So I've gone back to Bybit. So if you want to learn how to trade with leverage with this strategy, I wouldn't recommend more than 2 to 3x. And remember, it's much more risky than spot trading. You can check out my full length tutorial. All right, guys. So we're going to hop over to the 4-hour time frame where I originally had updated all these buy zones. Yeah, it looks good. So it could easily come down to 214 and bounce. That's why I put a bounce zone. As I talked about in my last video, what you can do if you're looking to get back into Matic, well, you can buy in at 214 and you can set a stop loss underneath the price. Just due to the fact that it's not good to start dollar cost averaging at a higher level in the RSI because you can correct much further down. As you can see here, this was a correction of about 32%. and then we had a move down right here as well. So let's say you put your first dollar cost average buy zone right here. Well, from there you came down another about 22%, and if you put a buy zone here to buy zone here, your average price would be sitting right around here. But if you put your first dollar cost average buy zone at oversold levels, you would have put it down here. You might have put one right here as well, but that's still a beautiful trade because your average price would be right here and you bounced right back up into profits. So my first buy zone is down here at 193. We're back above the EMAs. We broke out of this double bottom pattern. So in many cases, what will happen here when you break out of a double bottom, that's why I put bounce zone. Here's your neckline, guys. So sometimes when you absolutely explode, it doesn't mean it won't keep going, but I do think we may see some pullback here. What you can do is come back and test the neckline, and then you bounce back up to the upside, right? And your breakout target here from this double bottom, this is a really big double bottom, guys. Bring Matic right up to our take profit zone at 260. Beautiful how that works, huh? So another thing I wanted to show you guys here with Matic, and let me find it real quick. Here we go. So these are the Matic short positions. If you want to check out the Matic short positions, what you do is you come up to your ticker symbol, you click it, and you type in Matic USD shorts. And what it's going to do is show you the short positions on Bitfinex, which is a trading exchange, a very popular one. So you can see this is green. That means that shorts are increasing by quite a bit, which is typically telling you that you're going to see a move back down when you see shorts start to increase. Now, it doesn't mean it can't push a little bit higher. Anything can happen in the crypto game. Sometimes your metrics, your analytics, they're blown out of the water because you're always looking at what's more probable to happen, right? And when you see the shorts increasing, then usually you're going to see a move back down in the market, or you're going to see a move back down with the coin. And as you can see, we came up, we hit this resistance, and we're seeing a little bit of sell-off, a little bit of consolidation here. So I want to jump over to the daily time frame, guys. So we're here on the daily. You can see we beautifully held this trend line. Matic is one of the strongest moving coins right now in the market that are in the top 100. As you can see, we broke this previous high, and we're heading up to the top of our channel here, which is coming in. Let me drop a little price target. Coming in at about 266. We broke above the 0.786. We backed this as support. We saw that quick sell-off, and we bounced right back up to that level of support, and we're seeing continuation. So Matic is looking extremely healthy. As I've been mentioning, we're holding the EMAs, and we've probably had the bullish cross once again on the MACD. Quickly pull it up. These are my two main indicators, guys. I don't really think you need to use more indicators besides the MACD and the RSI, but that's just my opinion, guys. Scotch RSI is also a good one. So we've had the bullish cross once again, signals that you're going to see a pump, and we are seeing a nice juicy pump. And another thing I wanted to show you guys on the daily is we're starting to break out of this falling or rising wedge pattern. Of course, we can fall back into the pattern, but if we hold it as support, we see continuation. Now we can invalidate a huge bearish pattern, which would be a really strong signal for Matic. If we were to roll over here, we have the 0.786 as support as well, coming in at about $2. And then we have our bull run targets based off our Elliott wave theory, 677, 1181, 1767. So let's look at ETH, guys. So we can see here, I just wanted to quickly show you Ethereum on the hourly. We trended up into overbought, and we're seeing some consolidation, and usually going to start to see a move back down. Now it can stay overbought for a while. As you can see here, we came up, we were overbought, and price continued to push up. So that's always a possibility. And when price is pushing up here, shorts are increasing, right? So if you're like, well, shorts are increasing, we're going to move back down, and we saw some more continuation. And it's not a small move either for Ethereum. That was like a 9% move, which is pretty big for ETH. So that's what I'm saying. Even when shorts are increasing, even when you're overbought, you can still move up. Of course, eventually you're going to see your correction as you did here. You corrected hard, right? But that's usually why I don't close my entire trade. I rather close, 75%, let the rest run. If it comes back down and I break even on the last 25%, I'm perfectly okay with that. My videos are getting way too long. So we'll pop over to the 4-hour time frame. So we broke out of our double bottom for ETH, and your breakout target here, just a quick second, guys, pull up my little toolbox here. Your breakout target for this double bottom, or bring ETH pretty close to that level of resistance, 4631. Now we are trending into overbought on the hourly, so what may happen here is we come back down for a back test of our double bottom, similar with Matic, which is coming in at 4212. Also lines up with this previous level of resistance and support here. I'll actually move this line up just a little bit here. And then if we lose 4212, do target this strong level support at 3938 for ETH. If we pop over to the daily time frame, we're back above this trend line, which is a good sign, but we've come up and found resistance once again at 4416, and I've been talking about that ABC correction, so it's crucial once again for us to get back above that level of resistance, break this high if we are going to see continuation. Otherwise we can roll over and still slowly bleed back down to 3580. But it would be beautiful to see a breakout relatively soon. I do think that's healthy, as Bitcoin is underneath the 21-day moving average on the weekly, and we need to get back above that relatively soon, in my opinion. So let's finish off the video, because this video is way too long, guys. So you can see here Matic starting to break out a little bit of this bull flag pattern. That's what I'm talking about. If you want to trade a breakout, you can. There's higher risk when you're in overbought areas, but if you've taken your profit and you're like, you know what, I think Matic's going to keep going, always use your own discretion. Then what you can do is trade the breakout with a stop loss. All right, guys. So if you break out of this bull flag, I'll give you your target here. It would bring, oh, sorry, guys, a little bit of lag. It would bring Matic right up to this next level of resistance at $2.60. But keep an eye on a bearish divergence on the hourly. If we create a higher high and a lower high, it can signify the bulls are running out of strength and the bears are stepping in to push the price back down. All right, guys. So your next take profit zones here, 260 and then 319. And I've dropped in one more take profit zone based off the Fibonacci here, which is coming in at 411. This 319 target, what I did is I pulled my fib here from this swing high down to our swing low, all the way down to the wick low. And 319 lines up with the 1.618 extension. I can actually move this down just a wee bit to about 316. So that's what you can do, guys, to find your take profit zones. Take your Fibonacci previous swing high down to your swing low. And this 411 price target, what I've done is taken my fib here from the previous all-time high. Let me open this up. Down to the swing low. And you can see it's resting just underneath the 1.272 extension, which is coming in at about 437 for Matic. So that's it for this one, guys. Your dollar cost average buy zones here are down at 193, 175, 152, 132, 107. If you're spot trading equal amounts at each buy zone to bring down your average price halfway each time. If you're leverage trading, double your margin to bring down your average price. You can check out Bybit, check out crypto.com. Shout out to the Discord. We have over 1,000 members. I'm now posting these chart patterns for you guys. I'll be posting them every day for the coins that I'm covering. Right now we have Phantom, Soul, Matic. I'm going to add one more coin. I'm thinking possibly VeChain. And you can access them every day at any time by signing up to the Discord. It's the price of a coffee. You also have access to 1,000 members talking all things crypto. And I'll see you guys in the next video. Much love. Take care.